All right. So agenda-wise, obviously, we're going to go through the DeFi Fund report today. Talk about the revenues and yields from November. People have been guessing and hypothesizing about what we did yield-wise. Some people were accurate. Some people were overzealous. Regardless of the situation, we had an incredibly successful month of November when it comes to the platform. And then also have some housekeeping stuff about the rest of the year going into Q1 of next year. And then go from there. So, Michael, where should I start? I guess the fund is like our crescendo, right? So I should talk about...
Get the boring things out of the way first. Housekeeping.
Get the boring housekeeping stuff out of the way. All right. There's no update on NFTs specifically. People who want NFTs have gotten NFTs. We still have, I believe, 73 in our possession. They are... those rewards are getting burned. I know somebody mentioned in the general chat just now about, Paintball did, that there hasn't been any burns as of recent. That's because I have other things planned going forward. So, for the month of December, we did Halloween, we skipped Thanksgiving, but we're going to have a special event for Christmas. We are going to be doing the 12 days of Stacemas. And so the 12 days of Stacemas are going to be a collection of events on a daily basis that involve either some sort of buying event, some sort of NFT sale, some sort of giveaway. Ultimately, what that means is we are going to be spending 12 days from December 13th through December 24th, that 12-day period. We are going to spend acquiring and burning a significant sum of tokens. So obviously, everybody here knows that my goal is to get us below 60 million circulating supply before the beginning of the year. We are at like 2.6 million to go. So we have some tokens to catch up on. So we are going to have some OTC opportunities. We're going to have some market buying. We're going to have some NFT sales. We're going to have some bonuses. We're going to have some giveaways. Basically, for 12 days from the 13th to the 24th, we are going to, for one way or another, acquire tokens and burn tokens in significant chunks. Probably 200 to 300,000 a day. And so, depending on how we do that, is up to the community. But we will have our 12 days of Stacemas, which won't necessarily be specific events, but it will be a hyper focus on finishing our Q4 focus of supply reduction. So Q4 has been, we've been aggressive in reducing the supply of the token. We are north of 180 million tokens burned. Aside from what's in the NFT contract, everything else is circulating. And so we've had this focus during Q4 of supply reduction. Moving into Q1, we are going to pivot a little bit when it comes to that strategy. We're going to move into more of a supply maintenance. We're still going to do plenty of burning, but we do want to spend Q1 at least of 2024 focused on fund growth in strategies. So that will shift a bit, but before the end of the year, we remain focused on this aggressive supply reduction. And so 12 days of Stacemas is coming, the 13th through the 24th. So I'm working with Ian for a little bit of marketing, also strategizing with the team about how do we get our hands on this amount of tokens, and how we go about doing that from a strategy standpoint. And then moving into next year, we obviously still have most of our focus on the DeFi fund and growing it and scaling it, taking care of it. We are in the process of having a Binance account through our company in Panama. So that will be an option for us, another avenue for potential revenue generation when it comes to different trading strategies, automation, stuff like that. And then obviously we also want to scale our services. So one thing that we've been hinting at over the last couple months is turning what we do with the DeFi fund into a type of service where we can have clients.
Yes.
And yes, yield as a service. Yeah. So now that's not something that we're going to do on a small scale. So we're all about efficiency. So what we're doing is we're having conversations with specific individuals about the potential of having a fund for them that we manage for a fee, and then take that fee. And as of right now, the plan is to have 100% of that fee come back to the Stasis protocol, whether it's buying and burning tokens, whether it's going back into our DeFi fund, whatever it might be. And so we are exploring opportunities to bring more capital into the ecosystem and then have the fees from that capital power the token, and that value be brought back to the holders, aka you guys. And so that's kind of where we're at right now. And so we have this hyper focus on supply reduction through the end of the year, and then starting in 2024, we start to take that focus on the DeFi fund, and we're going to start expanding and scaling it in a way that will drive more revenue to the organization. And if we can do that in the way that we want to, from an execution standpoint, 2024, along with how the market is acting right now, should be very successful for Stasis and the token itself. Hussey Bay, if you could open up a ticket. I'm not going to handle individual holder questions right now. If you could open up a ticket and we'll take a look at it. Generally, if your balance isn't going up, that means the supply is going into your wallet instead of into your staking. It just means your dynamic strategies aren't set up properly. So yeah, if you could open up a ticket, we'll take a look at it. Michael, any other housekeeping items before we get started?
I don't think so. I think that was pretty thorough.
Cool. Texas want to know what's the max size of the fund before it starts creating challenges. Basically, from a scaling standpoint, it would take a while. Because of the fact that we use Uniswap primarily. Uniswap's TVL, when it comes to its liquidity pools, is in the hundreds of millions. Actually, I think it's billions, right?
I think if we get to the point where scaling is an issue, it's no longer an issue.
Yeah, that would be. Not to make light of the question. I understand the question. It's a valid question. It would take a significant amount of capital for our strategies and the way that they are being executed to have a scaling issue. What we would do,
I would love to have that problem as a side note. That'd be great.
What we would do is, as the capital scales, we would be more conservative from an institutional standpoint with what positions we put our selves in, the size of those allocations. There is stuff like that where we would, for example, we wouldn't put $10 million into Rollbit. Like we wouldn't put $5 million into Pepe. You know, like there's an idea of like the more capital we have, obviously the more responsible we need to be with it. And so if we find ourselves in a position where we're managing a collective fund of $2-3 million, 2/3 of that is going to be in what we consider safe blue chip allocations that are also relatively conservative ranges, so we don't experience too much impermanent loss, and we leave ourselves open to the volatility of the market and capitalizing on that. And so there is a inverse relationship between the size of the fund and the amount of aggressiveness that we take within the positions. And so that's the only thing that I would see from a fund size standpoint. What do you think about that, Michael?
Yeah, it just comes down to balancing and position sizing. Obviously, with smaller market cap coins, we wouldn't be diluting ourselves by adding too much to concentrate liquidity pools.
Right.
But, a lot of the pools that we're in are not micro cap coins. So, again, for us to get to the point where it would be an issue, the protocol and the fund would have grown so large that, I don't know, we could all retire. Be great.
Yeah. I think ultimately everybody's end goal is retirement. Minimum needed. Gene wants to know. It's going to be like 6 figures or higher. So the last thing we wanted to do is put ourselves in a position where we have a $2 million collective fund, but we have 500 clients. And all of a sudden we spend 90% of our time doing client relations instead of managing the fund. And so for us, it's about efficiency. So we would rather have 5 to 10 large clients than 50 to 100 small clients. And because it's the same amount of money, but 1/10 of the amount of client relations workload. And so it is going to be something where it's exclusive from a minimum allocation standpoint, because what we want to do is we want to set people up with their own obviously address, but most importantly their own DBank that they can follow along in real time, because everything's on chain. You can see the positions, you can see the size of the positions, you can see the rewards, and you can see what the team is doing from a management standpoint. And I feel like that's the safest, most straightforward way of executing that strategy, because then there's no question about clients wanting to know where their money is. It's all right in that one spot that's exclusive to them, and then kind of go from there. So if you were to try to do that with 100 people who all have $10,000 in the fund, our job, because it is manually operated, becomes extremely difficult and clerically heavy, and we're trying to avoid that. So this is going to be something that's exclusive to probably, if I had to guess, like $100,000 or more minimum. That kind of client relationship where we basically are taking so one thing that is happening is we have the DeFi Fund report as it exists now for the past few months. So I have challenged the team to redesign the DeFi Fund report starting next year, where it not only presents the information, but it's going to tell a story. And so what we need to do is take the data that we have, and we need to craft a narrative about what it is we are building towards and the improvements that we've made month over month. And so the next DeFi Fund report should be something that is story based. It still has all the data, still has all the information that we have in it currently, but we're going to present the information in a way that shows our progress as a protocol, and then we can take that data and we can sell it to clients. And so this is the first step in what we consider a larger operation, that we now have an opportunity to take the information that we have, package it into a narrative, and then sell it to clients. And so that's kind of the process moving forward over the next couple of months. Cool. All right, Michael, I think it is time to get this show started. Just a quick recap. In late September, if you guys weren't paying attention or you weren't here, we drastically changed our strategy for the fund management, which has resulted in a significant increase in revenues for the fund. Before October, we were doing about $10,000 a month in revenue. Obviously, with our expenses and the way the market was running, that was unacceptable performance for both the community and the team. So we decided we would make a significant pivot towards yield generation and bringing value back to the fund now. And so in October, we changed from 10,000 to $26,500. It was a huge increase in revenue. And then we moved into November. And so, Michael, if you could, let us know, how'd November go?
November went pretty dang well. So for November, in yield alone, we generated $41,500 in yield.
Yeah, I think it was 41,218.
Yeah. So, almost, or I guess technically doubled what we did in October. So a pretty significant jump up. Obviously, a lot of that was propelled by, crypto in general, really waking up and having a rally. But that rally also brought volume. And we were well positioned within the pools, had really minimal rebalances through the whole rally, even up until now, at this moment, as of this morning. So not only were we able to capitalize significantly on that yield generation, but also the underlying beta exposure as well. So we saw a very healthy appreciation in the fund, in addition to a significant amount of revenue. And Patrick, if you want to talk about the big achievements of what we did with that revenue in November.
Yeah. So the fund itself generated $41,200. So that is $15,000 more in revenue than October. Essentially, revenues increased 60% over October. October revenues increased 100% over September. So naturally, we're very excited because the first half of November was a tease of what the bull market could look like when it comes to trading volume. Trading volume equals trading fee revenue, and that's where we get our bread and butter from. And so we generated $41,200 in yield. We also had the fund's value increase $22,000 overall on top of that. So what all that adds up to is we found ourselves in a position where we wanted to stay true to this aggressive supply reduction. So not only did we take $22,000 of that yield and buy back on the open market, we also took $28,000 and we OTC'd purchases from a handful of investors who were looking to take some profit. And so through that, we were able to buy back 4.1 million tokens in supply. 3.9 million were burned and 200,000 additional tokens were distributed in rewards. And so what you have is you have a situation where the overall value generated for the month of November was approximately $75,000. And so if you were to add the $51,000 in buybacks and then the value generation of the fund itself, it's about $75,000. And that was with a starting value, Michael, if you remind me, it's a starting value of right around 500,000, 460.
Let me pull that up real quick.
Anyways,
yeah.
Yeah. It was about a 15% value gain if you were to add all of those variables up. And so the nice thing is the 22,000 was actually, in my mind, 27,000. So when we started the month, we had 500,000 stasis in the multi-sig. It was about $5,300. Well, we took that and we burned it. And so when we look at the sheet, Michael will go through the sheet in a little bit. When we look at that sheet, the value increased $22,000 without that 5,300 in stasis tokens in the treasury. And so really the value gained for us when it comes to blue chip assets was even higher. So all of that combined, we were able to aggressively destroy tokens while also making sure that the value of the fund itself still went up. And so far, the first 5 days of December, with everything that's happening with Bitcoin and it's pulling all the other assets with it right now, the value of the fund's already up, I think probably 15% in 5 days. Now, everything's going to normalize. It is just the nature of the market. The market oscillates. But so far, I think with the fund revenue for the month of December, we're averaging a little over $1,000 a day. And so my message to the community is November was fantastic. $41,000 over 30 days is a great return for us, especially if you consider the size of the fund. I am cautious to project we hit 40,000 again, just because I know how the market is. I know the market oscillates. I know trends shift. And so for the month of December, I would love to hit 30,000 for revenue. Again, that's still strong. It's still incredibly impressive given the size of the fund. And then we can use that revenue to keep attacking the supply the way we are. And so we're going to kind of go through that process. But Michael, if you want to go through the sheet, we can talk some numbers and some points of interest. That'd be good.
Yeah. So this is the fund breakdown for November with how we were allocated. Some quick notes on a few things. We're completely out of anything to do with Pika, out of anything to do with Grail. Pika just because that token was retired. Grail because you all know how I feel about Camelot. Other notes, obviously MDB has transitioned over to Foxify, so that position was converted as well into the new EB Fox pool. But outside of that, one of the things I wanted to highlight, and I believe we talked about it in a prior update, was why we're diversified across the pools in the way that we are. And one of the things I wanted to point out specifically was optimism. So for November, optimism alone was the clear winner of the month for us, with over $5,800 in yield from just the optimism pool. That being said, the month prior, it wasn't a great performer. And that's what's kind of nice about being allocated the way that we are, is that these assets really do kind of cycle back and forth. They have good months, they have bad months, but when we're allocated properly across, all of these different things, having a nice exposure across the market, we're able to capture them when they do move, and we don't have to worry about FOMO, because we understand that, they're going to cycle with their months in terms of performance. But overall, everything was very strong in terms of the amount of yield generated. Nothing really fell outside of the metrics of what we were looking for. I'm always wary to kind of share notional value changes month to month, especially this month, because we did pull some to contribute to supply reduction, which a 5% reduction in circulating supply within a single month is pretty damn wild. But overall, very happy. When you factor that back in, like Patrick said when we were on the prior slide, you're looking at a significant month over month increase in value, not just from yield, but the underlying assets as well. So really looking forward to seeing how much we capitalize here on however much steam this current rally has left in it, and then the subsequent alt rally that we'll see once Bitcoin kind of loses its steam here. But very, very happy with performance across the board on everything. Just solid performance. Everything's still within the metrics that we use in terms of risk management, in terms of yield generation, in terms of underlying value fluctuations. The fund just held up fantastically. I don't know if you wanted to discuss anything on your end about specific assets before we go on to the next slide.
No, nothing major. I do like to emphasize the point that you brought up about how we're diversified enough that when one asset cools off, another one will heat up. But we're not so diversified that we are inundated with work every day and monitoring too many assets overall. Yeah. So it is a healthy balance we've struck, but we also keep an eye on the market overall. Like I know at the beginning of the month, once this month ended, the beginning of December, we added a Lido position, Lido ETH on mainnet. So that's our fourth position on mainnet. And so we continue to kind of look at like, all right, what are we overexposed? And I know Michael and I just talked about how like privately that, there's a certain percentage of the overall fund that we want allocated to each specific allocation. So we were able to take some of those gains and then build out a new ETH Lido position on mainnet with the gains from the other pools. And so we are just constantly evaluating and reevaluating how the positions are being managed and trying to like keep an eye on any of our biases. Like I'm biased towards certain assets, Michael's biased towards certain assets. And so we kind of have this push and pull of like what we should be doing and how we should be doing it, but it's worked out well.
While we're on this page and while we're still talking about yield, did you want to share the milestone?
Oh, sure. As of yesterday, we cleared $100,000 in yield since we launched, and 76% of that has been generated in the last 2 months. So we did hit a milestone yesterday. We have generated $100,000 in yield with the fund since we launched. The hope is that we can hit 250 within the next 4 months, and then, like any other type of threshold-based system, we hope that number continues to increase exponentially. So, it took us 5 months roughly to hit $100,000. The hope is that the next 100,000 is 3 months, and then the next 100,000 after that is 2, and we just keep trying to beat that number every $100,000 as we grow. So that's the new milestone that we hit yesterday.
Not too shabby considering the size of the fund.
No, not too bad at all. All right, moving on.
All right. Again, this is just kind of our visual representation of breakdown, how assets are spread. We continue to maintain diversification. We actually did a rather significant rebalance of the portfolio at the very start of this month. So things are a little bit more balanced out now. And that's something that we're always looking at. As we've kind of discussed already on this call, we never want to be too over allocated. We never want to be too concentrated. We want to make sure that we have proper diversification. We were looking at things and realized that we felt a little too concentrated, a little too overexposed on specific assets. So we went ahead and did a rebalance where we thought was appropriate. But even with this, again, not too concentrated on anything that gives us pause or concern. We have our micro caps like RLB and GMX that are going to be lower weights. Same thing with like the trading allocation. Obviously, we have a significant portion in WBTC, WETH, and that will always be our kind of flagship blue chip portion of concentrated liquidity, something we can always rely on, something that still provides a decent return when you have tight management. So overall, still feel very good about the basket of goods that we have in the fund. As Patrick mentioned, we added a Lido position, which timed out great with the pump that we've seen specifically in ETH that finally broke out and brought Lido with it. So we've already seen a nice return on that specific position. And I know we're also discussing still how we want to allocate a little bit more that we pulled out of our Go position, just because now's not the time to kind of keep that in stables, and we wanted to capitalize on some market movement and volatility and volume. And that should, I know we still have a little more to discuss, be deployed soon into something else.
Yeah, you know me. I'm always cautious with pumps like this, especially pre-halving.
Yeah.
Yep. Yeah, I think ultimately the key here is the DeFi Fund metrics on the bottom of the page. That's really for us. You kind of have to add those two numbers together: the monthly yield plus the P&L. That's a closer true value. So like we moved from 470 to 492, but we also took 51,000 and spent it. So, you add 51,000 to that 492, that's what the true growth of the fund was from the beginning of the month. And so that just comes down to different priorities. So obviously, the team's always going to do their best in the moment to decide what to do with revenues and everything. And so we did want to get as much supply off the table as possible. But moving forward, we do want to pivot a bit to that supply maintenance strategy and fund growth. And the fund growing will take care of the supply. It's just a matter of focus. So if we change that focus a little bit to allow the fund to grow more, and then through that growth, we will take care of more supply. It's just a matter of just kind of rebalancing that focus, because that focus always exists on a spectrum. Like this past month, it was like 80-20, 80% supply reduction, 20% fund growth. And so, to shift that starting in Q1 to be more like 60-40 fund growth and 40% supply reduction, it's always going to be there. It's just a matter of sliding scale what our focus is for the fund and just the tokenomics in general. We want to try and keep the backing value, the collateralized value of tokens closer to what the true value of the entire protocol's treasury is worth. And so if we go through and we spend a couple months focus more on value growth of the treasury and the protocol and the fund, we'll keep that collateralized value of the token closer. And then it's just a matter of, playing that back and forth, making sure everything's healthy. As much as we like the chart going up and being green all the time, which there's no reason or indication that it won't continue its upward trajectory as the market stays green and as we reduce supply and we go through that process. As much as we like that, we still also want to make sure that the protocol itself doesn't get too far ahead of its skis. It doesn't get too far ahead of itself when it comes to its metrics. And we stay true to that idea of like slow, sustainable growth. That sustainability is what makes it possible for us to be here. Now, 6 months later, it'll be the same thing that keeps us here another 6 months, another 6 months after that, another 12 months after that. And so as much as we like to satisfy that degen green candle feelings that we have because it's DeFi and because it's crypto, we'll have those moments. But at the end of the day, passive income was the goal. Sustainability was the goal. And we're doing our best to make sure that we keep the sliding scale of focus and the team's discretion. We always kind of keep that in mind as we move forward with what we're doing with the fund and with the protocol overall.
Let's see. So here we have our treasury breakdown. Nothing too significant to note. Unless Patrick, you wanted to. I know there was you wanted to highlight the treasury difference.
Yeah, the only thing that on this page was the beginning of the month, the end of the month operational balance for Stasis. We started the month with $500,000 or 500,000 Stasis, $5,300, and then we ended the month with zero because we're burning everything. But the point is that the value on the bottom is 603 to 637, so that increased 34,000. But it also includes a decrease in $5,300 in the native token, which at the end of the day, the native token, its value is only derived from its backing value, right? So
I think I have this page probably shows a little more clearly without the DeFi fund on there.
Yeah. Yep. Yeah. So it is something to keep in mind that like not only did we increase the value, we decreased our native token holding at the same time, which makes the true value of that part of the treasury even higher. That was the only thing that I had.
Yeah. Outside of that, this again is one of my favorite pages. And I like to think of this just as the protocol efficiency chart. And keeping operational balances at 0.1% while the DeFi fund is sitting at 77%, and basically everything else is just protocol liquidity.
Even this page. So we're at 77% in the DeFi fund. The other 22.7% is providing liquidity for the protocol. But we are getting to the point at the moment where we might have too much in liquidity. So our ratio is like 20-40, like 40% against our market cap. Well, obviously, as we burn tokens, our market cap goes down, right? So that ratio goes up. So we are to the point now where from a like fiscal responsibility standpoint, we would see better price action on the token if we reduced our liquidity a little bit, which is hilarious. Because it wasn't too long ago we were being accused of being a honeypot. So now we're actually at the point from a ratio metric standpoint where we have too much liquidity. But what is nice about that is we can take some of that liquidity. Let's say, for example, we took $30,000 out of the liquidity. Half of that is Stasis, half of that is Matic or STS Plus. Well, the half that we take out, that's Stasis, we're burning that. And so we would take the other half and we would put it into the DeFi fund. All right, well, so we just reduced supply even more and we boosted the DeFi fund percentage. So like if we were to take that out, let's say we took 4% of the 22% that's here in this composition, we took it out of liquidity and we put it into the fund, the DeFi fund will be back to say 81%, and then the liquidity provided would be, down to 18%, whatever it might be, metrics wise. So ultimately, what this is this is just a matter of us showing like, hey, 99.9% of the treasury is working for the users. Now, how we break that down from a utility standpoint, that comes down to the team, where we're to the point now where I have to run the numbers based on liquidity and supply. But every time we burn supply, from a metric standpoint, we don't need as much liquidity. And so the next couple weeks, especially with the 12 days of Stasis coming, there is an opportunity for us to reallocate some of the liquidity back to the DeFi fund to earn revenue. instead of it being where it is currently. So it's just a matter of efficiency. And I think from an efficiency standpoint, we're getting close to the point where we can reallocate some of this capital, which is actually a good problem to have.
Yeah. Also, quick tangential note: all of the values in this report have pumped significantly since the 1st of December.
Shush, bro. What is wrong with you?
I know. Just
manage expectations.
I know.
Jeez.
I know. All right. Moving along here. Protocol metrics. Just some points of interest. The overall reduction in circulating market supply, as well as just reduction in supply overall. So we burned 3.9 million tokens. That's 5% of circulating. And from the get-go of total supply, we've burned 69.5%. So the rate of burns and the amount that we've been able to reduce, even since we got rid of that initial chunk, has been great. Really happy to kind of see supply burning at the rate that we're able to burn it.
Yeah, so on the protocol metrics side, number 9 and number 10 was what I was talking about before. So the beginning of the month, we were at 35 and 17. Now we're at 40 and 20. And so that's a combination of two things. It's a combination of slightly more people are farming, and the supply reduction has boosted those numbers. And so, like I said on the last slide, we are to the point now where it is an inefficient use of capital for us to be in the pools as much as we are for the protocol capital. And so we can start reallocating chunks of it, which will do two things. It'll increase the efficiency of that capital. Great. It'll also boost the farm rewards for those who are farming. So it's kind of a win-win for you guys. If there's enough liquidity being provided by the community, that capital can be used more efficiently elsewhere. And then if you are farming, then the APY will go up, 5-10%. It just means more rewards for you. And part of the 12 days of Stasis is going to be more rewards. So that's something to keep in mind. So not only are we going to be burning supply, we are going to be distributing higher rewards during that 12 days as well. So everybody's going to win when it comes to the 12 days of Stasis.
Love it. As usual, wallets are listed in case you guys ever want to follow along with everything. I did want to cap off sharing a couple figures that are going to go into further enhanced reports, but we don't have here. Let me see. What can I share?
Can you share, bro?
Okay. So one that
Vip said you're doing too much.
I'm doing too much.
Too much.
In terms of the yield, our revenue generated, broken down.
Do we have a bar chart?
I have a pie chart, but it's very crude, and Ian's probably going to cringe. I could maybe post it in the Longhouse chat, but it's going to be exclusive.
Show it to us. The community needs to know that we are in phases of work, so you can show the crude stuff.
So this is how yield for November was broken down. So 55% went towards market buys and burns.
Okay, this is in the Longhouse chat.
30% was compounded, and 14% went to protocol operational expenses. So more than half of revenue generation was returned back to investors through market buys and burns.
Nice. And so right now our operations against revenue is 14%.
And then I'm trying to think of what else I can share in its crude state. Yes, here's another fun one we can share in crude state. This is early alpha for coming back to the or coming here for the report. This is a breakdown of total token supply. 78.9% is circulating, 20.9% is in the NFT contract, and only 0.2% is protocol owned. So in terms of tokenomics, you don't have to worry about someone who is vested. You don't need to worry about a VC or large founding partner dumping on you. The entire, for all intents and purposes, supply is either circulating or locked into the NFT contract. And just very happy to kind of see healthy tokenomics like that.
You, what about the month over month yield chart? Do you have some of that?
I do. It's very crude, so you guys are gonna have to forgive me. I feel a little cringy sharing it, but I can definitely pull that out.
That's what she said.
Heyo.
If you are listening to this on the playback and you want to see what Michael is posting, it is located in the Longhouse chat. So the voice channel in the Stasis Discord server, it is in the Longhouse chat. That's not the chart I was looking for, Michael. I wanted to see the...
Gonna delete that one.
I mean...
Oh, I know which chart you're talking about. Okay, here we go. I know
the bar chart.
The bar
month
chart.
Over month.
Gotcha. Let me get that guy real quick. Here we go. All right. So,
there we go.
Someone prior had asked about outperforming the market, or our underlying beta exposure to the market in general. And this is
That's
looking...
not even the one I was talking about.
Nope, not that one.
No.
I don't know which one you're talking
like...
Oh, I know which one. Okay, we're going to delete that one too.
August yields, September's yields.
My
okay.
Lord. Okay. Too many
bar charts. We have done this before. This isn't our first time doing this job.
I have too many internal charts. That's the problem. I've got charts and charts and charts.
This is something that, okay, so while Michael's sorting this out, this is something that there you go. Thank you. Appreciate that. So what Michael just posted, July through November, the amount of yield, the percentage return, and the fund value. So as you can see, July and August, our revenues were crazy low against the fund value. And on the last bar graph, the value of the fund was going down. And obviously I don't like that. I don't want that. And so we made a change, right? So mid-September, we changed the strategy, we changed what we were invested in, and we changed what our focus was. And so starting in September, not only was the fund's value leveled off on the last chart, the revenue gain and the percentage gain on the fund was increasing. So you can see the moment we changed our strategy and the moment we started focusing on new assets and new opportunities, our revenue has changed significantly, not only from a dollar amount standpoint, but the fund is growing in value and our percentage gained on the fund is increasing as well. So that one is a clear indication that what we are doing is working. And so the new report that I've been talked about at the beginning and what we're going to do differently moving forward is now taking this information and telling a story, kind of like what I just did there about how our strategy change resulted in this. So the new report moving forward is we're going to try a bit of forecasting. So we'll go back and we'll look at historical data, current market trends, just the macro market health overall. And we're going to be able to start trying to forecast out what we might think we'll be able to achieve on a month-to-month basis. And this is something that every business does, whether it's a restaurant, grocery store, financial services company, whatever it might be. Every company is asked to forecast forward what their expenses will look like, what their revenues will look like, what the health of the market will potentially do to those forecasts. This is something that every business is asked to do. And so at least 6 months, we're going to try to do 5 to 6 month forecasts forward. And it's just a matter of like, okay, let's temper expectations. Let's inject some reality into this. What's the fund going to look like? What's our focus for the fund during those months? And try to give people some content that they can digest that tells them a story about what we're trying to do with the organization and what we're trying to do with the fund. And so graphs like the one he posted with the 3 bar charts, that tells a clear story of what a pivot in strategy did for us over the last 3 months. And that's the type of information and that's the type of content that we're going to start producing when it comes to selling this organization and scaling this organization. And I think that's going to be really strong for us.
Yeah, absolutely. At the end of the day, our whole ethos is we want to present you guys with as much information as we can. We want to be as transparent as we can. There should be no surprises when it comes to your investment and your interaction with Stasis. We want to make sure that we are passing on any and all information that we have onto you guys as the investors.
No, bro, we're going to hide it all. We're going to give them the least amount.
Least amount of information.
Least amount. Isn't that what people expect?
No more leaking early charts in the longhouse.
Yeah, you're not allowed to leak information without us talking about it first. All right, that's it for the DeFi Fund report. November was fantastic. We generated $41,500 in yield, which is a 60% increase over October, and October was a 100% increase over September. And so I will preface that with, let's temper our expectations. Our goal for December is somewhere in between October and November's number. I will be ecstatic with 30,000. I will be ecstatic with 40,000, but we're going to most likely fall somewhere in between. And then through that, going into next year, we are going to slide the scale of focus from not as much supply reduction, more supply maintenance, and then we're going to slide that focus a bit into fund growth and scaling the operation. So, you, Green Nixon, if you were here earlier, you would have heard it earlier. Anyway, so that's the plan right now. That's where we're at with the fund. It is the holidays. Anything can happen with the markets. Obviously, we were talking a couple weeks ago about how, like, are you going to have a holiday sell-off? Are you going to have a run into the holidays? The market decides what the market does, and we're just going to be prepped for either scenario. And so moving into next year, once December's over, we're going to do the 12 days of Stasis. We're going to go through and we're going to finish off the year strong when it comes to supply reduction. And then moving into Q1, we're going to pivot a little bit into supply maintenance and fund growth. And we're still going to take care of you guys. We're still going to take care of the market. We're still going to deliver value back to the users. We're just going to do it in a way that's the focus is going to be slightly altered. Besides that, that's all I have for this update. We have schedule-wise, we have events on the events tab in Discord. Check it. Make sure you know what days we're doing calls. Make sure you know what days we aren't. Right now, I think we're good to go every Friday through the rest of the year. If that changes, we will let you know promptly. If Michael can't attend, I will do it alone, and then they will be a much shorter call than if it's just two of us. Other than that, Michael, do you have anything else you want to add before we wrap this up?
No, just thank you all for being here. Thank you for staying here as part of the community, and it's been a great year. Looking forward to closing out with hopefully another good month, and we'll do it again next year.
Cool. All right, I'm going to give $20 in Stasis away to 3 people. And those 3 people are, let me randomly, not random, look around. I'm not letting you pick because you always pick one letter people. Good Crypto Win, $20 for you, sir.
Fitting name for a fitting prize.
Yes. Good crypto win, $20. Stasis. You know what? I'm gonna give $20 to Paintball because Paintball has been active lately, and I'm always happy to read what he has to say. Very smart, very smart. I love it when you two start talking about different markets and stuff. I sit there and I look at it and I go, cool, and then I move on with my life.
I just picture you sitting back in your chair going, nerds.
Nerd alert. Yeah, I do that all the time. And then the last $20 in Stasis is going to go to Pro Toxic Ninja, because why not? Pro Toxic Ninja, $20. Thank you for boosting the server. That was very nice of you. All right, so good crypto win. Paintball, Pro Toxic Ninja. If you can open up a ticket. Everybody else, thank you so much for joining us for the DeFi Fund report, the monthly update. We will have the playback and the report posted to you later today as soon as Michael gets the recording up on YouTube. And then I hope you have a great weekend. Wait, no, it's not Friday. Dang it. I hope you have a good rest of your week and like weekend. Friday. It does feel like Friday because that's when we usually do this. And then I will post information as I have it about the 12 days of Stasis and what to expect. I won't tell you everything because it's supposed to be a surprise. And
I'll probably leak it. Don't worry.
Michael will probably leak it, the rough version that's just doodles on a notepad. And we will go from there. So everybody have a great rest of your day. And we will talk to you guys soon.
Cheers, everyone.